Hi guys, Funsho here from We Coach Crypto, and today I'm giving you more of a classroom edition where I'm going to be talking to you all about tokenomics. Okay, so the first thing that you're going to want to do when we're talking about tokenomics is you need to have the right resource. Now, I find that the best place for you to find out tokenomics about any cryptocurrencies is coinmarket.com. So, once you're on coinmarketcap.com, then what you're going to want to do is click onto the corresponding cryptocurrency that you want to look into. So in this case, I've clicked onto Bitcoin, and if you scroll down slightly, what you'll find on the right hand side, and this works exactly the same if you're using the app on your phone, is an area that gives you the circulating supply and also gives you the max supply and the total supply. Now, all of these things are extremely important and they're overlooked by many investors in the cryptocurrency marketplace. Now, simply, tokenomics comes down to supply and demand. Now, I'm going to be talking to you about the supply side, and I'll do another video about the demand. So with supply, there's three things that you want to make sure that you're looking at. So the first thing is how many tokens are in circulation right now. Now, why is that important? The reason that it's important is you want to understand how many tokens are available for everyone to purchase right now, or people that already own them, and then in the future, how many more tokens are there likely to be? And is this something that is a fixed supply or not? So we need to look at inflationary and deflationary by nature. The second thing is how many of these tokens will ever exist. So if you have a deflationary model, it means that the supply will be capped, which means there's no more of these that will ever be created than the number that is listed in the total section on CoinMarketCap for the corresponding cryptocurrency. Okay? And the third thing that you want to look at is how quickly are new tokens going to be created. Now, again, this is extremely important. The reason that it's important is if they're going to be created very quickly, then that can affect the price of that specific token. So for example, with Bitcoin, we're looking at 145 years until all of the tokens are in existence. And if we take how many are currently in existence and then also look at what the max supply is, we can start to get an idea of, with it being either a deflationary or inflationary model, how much of a price impact there could potentially be in the future. So with Bitcoin in particular, there's currently 19 million roughly tokens that are in circulation. So these are tokens that are owned by people, that are on exchanges, that are on hardware wallets, etc. And people are buying and selling these all of the time. Okay? But there's only 21 million of these coins that will ever be in existence, which means there's only 2 million more coins that are going to be available for people to buy over a 145 year period. So in terms of how that affects the price of this particular token, we wouldn't expect it to affect the price dramatically in any way, shape or form. So when we take all of that into consideration, what we can figure out is that Bitcoin should be a good store of value. And the reason for that is the majority of the coins are already in existence, but then on top of that, there'll never be any more than 21 million coins available. Now, there are other things that you need to take into consideration at this point about how popular Bitcoin is. So when we look at things that are going on in the world right now, the war with Russia and Ukraine, we look at the pandemic, we look at the economy, we look at the stock market, we look at all the debt that's going on in the world, there are a lot of institutions and retail investors and even countries that are showing massive interest in Bitcoin. Now, whether you want to say that's as a hedge against devaluing fiat currencies or whether they see it as a good investment, by the by, we're seeing more and more people get involved in the crypto marketplace. Now, coming on to Ethereum. Now, Ethereum is a cryptocurrency that's actually recently changed the way that its tokenomics work. So at the moment, there are 118 million Ethereum tokens that are in existence. But the way that they've set up their tokenomics, there will only ever be up to 120 million of these tokens. So even though it's an inflationary model, because more of these tokens can be printed, the way they've set this up, you'd actually look at it more as a deflationary model and also a store of value. However, I'm going to come on to Dogecoin. Now I've chosen this coin because a lot of people have heard of it. It was very meme related, it had a huge push. But this has got an inflationary model, okay? So there's 132.67 billion tokens that are in circulation right now. But the total circulating supply, or the total supply, you can't put a number on it because it's inflationary by design, which means they could just continue to create more and more and more of these tokens. Very similar to the setup that we have with fiat currencies. People keep printing more money, it devalues your purchasing power. So with Dogecoin in particular, from an investment standpoint, you've got to take into consideration that on average, there is 5% inflation to this cryptocurrency per year as things stand. But again, that could change at any point. So when you do a comparison between the likes of Dogecoin and the likes of Bitcoin and Ethereum, for me personally, there's one clear winner. You need to be looking at cryptocurrency projects that are deflationary by design, that are taking a long period of time for the rest of the tokens to come into fruition. And also, the other thing you've got to look at is allocation. Now, allocation is so important because you may see a particular project, the utility it has, you think it's a great purchasing opportunity, and everything could fall in line. But there might actually be a handful of people that own large portions of this particular project. And if that is the case, for example, with Dogecoin, there are 5 wallet addresses that count for 25% of the entire circulating supply of tokens. If later down the line more tokens come into circulation and one or multiple of those 5 people decide to sell, that could massively affect the price of that token. So again, these are things that people should be looking into and should understand before they start investing in cryptocurrency. Hope that video has been useful for you and has given you some food for thought. Don't forget, guys, make sure if you want to get access to information like this regularly and all the latest news and articles, you take advantage of our free Discord server. Click the link below, get yourself involved. There's lots of things that you can do there. There's an investing general chat, an NFT general chat. We have the latest news, articles, market updates, videos, and people can ask questions and talk amongst themselves. It's a really good environment to be in, and just to get yourself from someone that's not really knowing much about crypto to a level where you're comfortable, safe, and have got a pretty good understanding, this is a great place to spend time. But if you found this video useful, please make sure you give it a thumbs up and share it with anyone that you think would find it useful. I will be doing a demand video next, so keep an eye out for that, where I'll be explaining to you how the demand element of cryptocurrency works and why it's so important to pay attention to it as well. Just to give you an idea, this is a Fetch.ai cap. There are many of them around, but it has now been on my head. So if I was to now put this up for sale as a one-of-a-kind Fetch.ai cap worn by me, it's not going to be worth millions. The reason it's not going to be worth millions is because I'm not a celebrity. People do not think, wow, that's been on Funsho's head. So from a demand perspective, it's so important to understand what has got the potential to make a lot of money and what hasn't. So we'll be going through those things anyway. Hope you've all enjoyed the video, and I'll catch you guys in the next one. Take care.